This is CGTN, China Global Television Network.
Hello there and welcome to Global Business Africa. We'll be giving you insight into Africa's business and financial markets. I'm Uche Okoronkwo coming to you from Kenya's capital, Nairobi. Let's start with a look at the markets. Now, most emerging market stocks fell slightly today as investors wait for more cues on U.S. monetary policy. MSCI's index of emerging market stocks fell 0.5% on the day, having recently hit a record high. Now, besides South Africa, most of Africa's key markets were pretty much positive today. South Africa's all-share index extended declines for a second day. That's amid weakness in resource firms BHP Group and Anglo American. Also, fellow benchmark heavyweights Naspers and Richmond dropped on the day. Now, the four stocks account for about 48% of the gauge by value. And analysts are saying that today's weakness also came after the International Monetary Fund cut South Africa's growth forecasts, even as it raised its projection for the global expansion. Now, also coming up on today's show. Foreign direct investment globally falls by 42% in 2020. And pirates who seized 15 sailors in the Gulf of Guinea yet to make contact with authorities. And buses made in Cameroon and the team behind them. Now, foreign direct investment globally fell by 42% to an estimated $859 billion in 2020. That is compared to a $1.5 trillion in 2019. In its latest investment trends monitor, UNCTAD, the UN body for trade and development, indicates that FDI finished 2020 more than 30% below the trough after the global financial crisis in 2009. Now, it is being seen at levels last seen in the 1990s. The decline was concentrated in developed nations, where foreign investment flows fell by 69% to an estimated $229 billion. Flows to Europe dried up completely, negative $4 billion, including large negative flows in several countries. A sharp decrease was also recorded in the United States. It was down 49% to $134 billion. The decline in developing economies was relatively measured. On the other hand, it was down about 12% to an estimated $616 billion. Now, investment flows to Africa declined by 18% to an estimated $38 billion from around $46 billion in 2019. Overall, in North Africa, inflows fell by 32%, while Sub-Saharan Africa recorded an 11% drop. Morocco was, however, robust, with foreign investment almost unchanged at $1.6 billion. Egypt also remained the top recipient of foreign direct investment in Africa, and that is despite a significant decline in inflows by 39% to an estimated $5.5 billion. Meanwhile, inflows to Nigeria declined by 78%. Senegal was amongst the few economies with higher inflows in 2020. It registered a 39% increase to $1.5 billion, and that was supported by rising investments in energy. Foreign direct investment in South Africa fell by 54% to $2.5 billion from $4.6 billion in 2019. Well, let's now make a sense of all those numbers. We're joined by James Zhan. He is a Senior Director of the UNCTAD Division on Investment and Enterprise, and he is joining us now via Skype. Great to have you on the show with us, sir. Now, what was certainly interesting to see is that FDI flows to Africa declined 18% and just 11% to Sub-Saharan Africa. Was this drop in investment flows expected, especially when you compare it to the drop in FDI in developing nations? What do you attribute this drop to?
Yeah, indeed, as you said, that FDI flows to Africa declined by 18% to an estimate 38 billion from 46 billion in 2019. And this is due to the COVID-19 pandemic, of course, but also coupled with the low commodities prices. And in fact, out of the 39 African countries, 28 recorded negative growth, and it's only 11 countries positive growth. So Africa, as you compare with advanced countries, that weathered the storm better, but many countries still suffer from the decline of last year.
Well, Mr. Zhang, also interesting to note is that the COVID-19 pandemic affected all types of investment, but greenfield project announcements in particular, that fell by 63%. Now, what does this reveal about the future trends going forward?
Yeah, this is a key indicator for the future investment flows. As you mentioned, that it declined by 63%. It is really sharp. So the data of greenfield investment on announcement basis normally serves as an indicator of future prospects. So sharply lower greenfield project announcement point at a continued downward pressure and suggest a further FDI decline. And for developing countries, particularly for Africa, the prospects for 2021 is our major concern. Although FDI flows in Africa appears relatively resilient in 2020, but greenfield projects announcement were more than halved, and this is to an estimated $28 billion from $77 billion in 2019. And international project finance also fell by 40% in Africa, another indicator for the investment this year and the next. So these investment types are crucial for productive capacity and for infrastructure development. And it's also very important for sustainable recovery prospects in Africa.
Now, you also expect FDI flows to remain weak going into this year. Now, given the fact that we are seeing a lot of optimism around growth numbers following especially those vaccines coming out, why do you still hold this position?
Yes, there are some signs of positive indicators, but there are still plenty of risks for international investment. Risks relate to the latest wave of the pandemic, the pace of the rollout of the vaccination programs, particularly in developing countries, and economic support package is lacking in developing countries, in Africa in particular, and it's a fragile macroeconomic situations in some major outward investment countries, and there's also uncertainty about global policy environment for investment and the geopolitical tensions. All this will continue to affect FDI in 2021. And investors are likely to remain cautious in committing capital to new overseas productive assets. A turnaround in industrial sectors is not yet in sight. So there could be signs of recovery, but it's led mainly by cross-border merger acquisitions. So this different type of investment, and mainly happened in advanced countries. Another reason is that international investment projects tend to have a kind of a long gestation period and react to crises with a delay. So it's both on the kind of downward slope and in the recovery. So overall, the global FDI is likely to follow a kind of U-shaped recovery. And this is unlike the global trade and the GDP, which have been predicted to be a V-shaped recovery starting already this year. And it should be noted that the recovery means bottom out of the decline and the reassumption to growth. But it will take some time for the global FDI to reach its previous peak level, that is $2 trillion in 2015. So the road to global FDI full recovery remains bumpy, as witnessed in the wake of 2008-2009 global financial crisis.
Right. Well, we do have to leave it there, but many thanks, Mr. Jean, for making sense of all those numbers. That, of course, is James Jean. He's a Senior Director of the UNCTAD Division on Investment and Enterprise. Well, let's shift focus now. Pirates who seized 15 sailors when they stormed a Turkish crude container ship in the Gulf of Guinea 2 days ago have not yet made contact with authorities. An Azeri sailor was killed when armed attackers boarded the vessel and abducted about 15 Turkish sailors. The Liberian-flagged container ship was headed to Cape Town from Lagos. Now, Maritime reports show that the attack happened at around 160 kilometers off Sao Tome Island on Saturday. According to Turkish media, the operators of the vessel were abducted at gunpoint. Istanbul-based Boden Company provides technical management services for the vessel. Turkish President Recep Tayyip Erdogan has said that the government is working to ensure the swift release of those sailors. Well, let's find out more from Phil Ihaza in Abuja. Great to have you with us as always, Phil. Now, experts are saying that these pirates do come from Nigeria's turbulent Niger Delta region. According to the International Maritime Bureau, there has been a steady increase in kidnappings over recent years in that area. What has been Nigeria's government's response to this escalation?
Well, thank you, Uche. Yes, indeed, we've seen some heightened escalation in that region. Of course, some of them from pockets of militant attacks, in spite of the amnesty program that the government has had in place for some time now. But it's obvious also that the government has responded with increased tactics, force, and even having to review some of its laws. For example, the government says that in spite of the fact that there's been heightened attacks, more than 70% of those attacks were unsuccessful because of its robust surveillance and capabilities to respond in time. It also says that more than 70% of its operational ships were at sea, patrolling the waters, and also ensuring that about 27,000 hours were spent on sea by those operational ships. In fact, it says it actually arrested about 600 vessels due to criminal offenses by those militant operations or those kidnappings. So indeed, the government still thinks that in spite of the heightened attacks, majority of them were not successful, and its response has been good so far.
Well, we do know that Nigeria launched its own Deep Blue initiative, which was meant to develop maritime surveillance and security in the area. Last year, it did secure its first conviction under a new anti-piracy law, which it introduced. So give us a sense of what the progress has been in regards to this initiative.
So I'm taking it from the anti-piracy law. Of course, it's aimed at reducing, preventing, or suppressing attacks, criminal attacks on the waters of Nigeria, and of course ensuring that there are no criminal attacks against aircraft, vessels, ships on the waters. Now, experts have actually said that that law, even if it was reviewed, is still it's too early to really appraise or review that law in terms of its implementation. But they're actually saying that that law may need to focus more on specific functions for several parastatals and agencies that are involved in patrolling the waters. And so, but if you look at the Deep Blue project or the Deep Blue initiative, that initiative is also targeted at ensuring that Nigeria acquires assets like UAVs, the unmanned aerial vehicles, sophisticated gadgets, as well as install command and control centers that are well able to patrol the waters. And now, if you look at so far, the agency, the Maritime Agency of Nigeria, NIMASA, says 80% of that target has been achieved. It says that majority of those assets have been acquired. It also says that the command and control center has been launched in Lagos, which was done some time ago. So it also says that between June of 2019 and August 2019 and June of 2020, quite a number of these have been achieved, 80% of the Deep Blue initiative. So that's actually a good way to go, and we hope that it will also enhance the patrol efforts of the maritime security operatives.
Well, as always, many thanks, Phil, for your insights there. That is Philly Haza joining us in Abuja. Well, let's move on now. Pfizer has revealed that it is working on developing a booster shot to protect against the COVID-19 variants. It is working in partnership with German pharmaceutical BioNTech. However, Pfizer says that studies needed to evaluate the booster shot are yet to be determined in agreement with regulators. Moderna Incorporation recently disclosed it will also test a booster shot aimed at the South African variant of the coronavirus, and that's after concluding the antibody response could be diminished. And let's now take a look at other corporate headlines today. The world's largest manufacturer of motorcycles and scooters, Hero MotoCorp, has surpassed the significant milestone of 100 million units in cumulative production. Now, the 100 millionth bike, the Extreme 160R, was rolled out of the company's manufacturing facility in Haridwar in the northern Indian hill state of Uttarakhand. Now, this is also the 20th consecutive year that Hero MotoCorp has retained the coveted title of the world's largest manufacturer of two-wheelers. Meanwhile, Microsoft has beat Wall Street estimates for Azure's revenue growth. The company's shares, which gained about 41% in 2020, rose 4% in extended trading on Tuesday. Microsoft said revenue in its intelligent cloud segment rose 23% to $14.6 billion, with 50% growth in Azure. Now, the rise is attributed to the shift to work from home due to the COVID-19 pandemic, which of course has accelerated enterprises' switch to cloud-based computing. Meanwhile, Boeing has taken a $6.5 billion charge on its all-new 777X jetliner. That's after posting a record annual loss. The plane maker says it now expects the 777X, which is a larger version of the 777 Mini Jumbo, to enter service by late 2023, and that will delay the jet's entry for the third time. This is due to tougher certification requirements after the 737 MAX safety crisis and, of course, plummeting demand. And finally, Google is planning on launching its news platform, News Showcase, as early as next month. This is the latest tactic in a high-profile campaign against the Australian government's planned legislation. The legislation is meant to make the company pay local news providers for content that appears in its search engine. Now, the decision to push ahead with the launch was an apparent show of Google's willingness to run its own content deals, negating the need for government-mandated legislation. And that is a look at our corporate headlines. Well, let's take a short break now. Still to come on the show. More countries in West Africa turn to the private sector for power generation. And the Zimbabwe Stock Exchange to continue on an upward trajectory this year after an impressive 2020.
There's more to this place than just glorious landscapes. There's more to it than just, say, Table Mountain or glorious, endless salt flats. There's more to it than countries that are home to some of the deepest mines in the world. There is so much more to this place, even if it is home to some of the finest diamonds on the planet. It is the sheer diversity of the people who call Southern Africa home, and the relentless drive to make it a better place that make it so special. And we know that because this too is home. No one knows Southern Africa like we do. CGTN. See the difference.
Africa is the nexus of enterprise, and global business will tell you why it matters.
From the mega investment projects to multi-billion-dollar mergers and acquisitions.
Africa today collects, just in terms of revenues for taxes alone, $545 billion a year. If you take 10% of that and you devote it to the energy sector, problem solved.
All this on Global Business, weekdays at this time on CGTN. Welcome back. Now, the distribution of a COVID-19 vaccine is expected to drive energy access across the continent this year. In their energy access trends for 2021, DRE Technologies analysts point out that tariffs, subsidies and vested interests will also play a huge role as far as who gets electricity. Now, the analysts also note that there is a growing number of nations in Western Africa looking to the private sector for power generation. Investors are also focused on energy access, are shifting to commercial and industrial investments. Well, let's take this all apart with William Brent. He is the Chief Campaign Officer of Power for All. Great to have you on the show with us, Mr. Brent. Well, let's start off with the fact that the energy access sector was hard hit by the COVID-19 crisis. In fact, experts say it is in crisis. For example, some research revealed that over 50% of companies in the off-grid renewable energy sector probably had to close their businesses last year. So how do you see this reality changing the picture for energy access on the continent going forward?
Thanks, Uche, for having me. So while it's true that the local companies in particular were impacted by COVID last year, and you saw that the lion's share of investment going to just a handful of foreign companies, the pandemic also very clearly illustrated the need for stronger local ecosystems, entrepreneurial ecosystems, supply chains, due to the disruptions of the global supply chain. So what you're seeing actually this year, I think, will be an increased focus on investing in local companies and building them up, as well as local supply chains. And you're actually already hearing calls for as much as up to half of funds coming into the sector to be earmarked for local companies. So I think analysts actually expect to see a rebound of the sector in Q2 in terms of consumer demand and investment. It'll be somewhat uneven. I think the other thing is that we're also seeing increased calls for demand side subsidies to help consumers afford energy access solutions. So all of those things combined actually make 2021 potentially quite a good year for the sector.
Well, that is quite optimistic, because we know that most governments right now in Africa, they've had to redirect their financial resources, which were intended for energy developments, to sectors such as health. Also, the donors, multilateral agencies, they're preoccupied with COVID-19 right now. So where will we see the sector finding financial relief? What particular places do you think they can go to going forward? And certainly, will it be enough to maintain that momentum we saw pre-COVID?
So you're already seeing institutions like the World Bank, the African Development Bank, and other bilateral and multilateral donors definitely putting more money into healthcare infrastructure. There's a huge number of rural health clinics in Africa in particular that are still unelectrified. So I think you're definitely going to see an increased investment across the board in healthcare. There's also a rising call for more climate finance into the energy access space. COP26 is this year. And I would expect that you're going to see a lot more climate finance coming into the energy access sector that was previously absent. At the same time, you have bilateral donors like the Ayrton Fund in the UK, USAID in the United States. With the new Biden administration, USAID will actually be a cabinet level position. You're going to see a lot more interest in renewables and pushing renewables internationally as well, including in Africa, coming from those countries, I expect. Lastly, I would just say that there are a number of organizations like the Rockefeller Foundation, which are trying to pool concessionary finance so that they can crowd in additional finance. So Rockefeller's committed to $1 billion already over the next 3 years to invest in energy access and decentralized renewables, and they're looking to crowd in additional money. They've already got a $2 billion commitment from the U.S. International Finance Development Corporation. And I think lastly, you'll probably see infrastructure capital as well as more commercial capital starting to take a serious look at energy access again after they did a couple of years ago and then decided to hold off.
Well, overall, how do you think COVID-19 will influence Africa's move towards renewable energy? We have some experts saying that the impact that COVID-19 has had on energy demand as well as supply chains in the oil and gas sector, and of course, government energy budgets, that will create an opportunity for Africa to now accelerate its use of renewable energy resources. What are your thoughts on that?
I think Africa's always had the opportunity to be a global leader in adoption of renewable energy, and the handwriting's on the wall already. That we're in the early stages of a global energy transition, and I do think, and I feel confident that African leadership will take the opportunity to leapfrog into a whole other different paradigm in terms of energy infrastructure. Coal is already on a death spiral, despite China and Japan's efforts to, dump their technology into emerging economies, including in Africa. Investors, insurers are steering clear of coal. Natural gas and oil still have a future, a longer lifespan, but I also think that with the new administration in the United States, a refocus on climate and clean energy, you're going to see that have a domino effect in terms of uptake of solar and wind, especially as costs continue to just come down. It's way too affordable for governments to ignore renewable energy at this point.
Well, we'll certainly continue to watch that sector. Many thanks for your insights, Mr. Brent. That, of course, is William Brent. He's a Chief Campaign Officer at Power for All. Well, let's turn our attention to Zimbabwe now. The country's stock exchange is expected to continue on an upward trajectory in 2021 against economic headwinds facing the nation. The equities market was the best performing investment vehicle in 2020. It registered a 968% growth in turnover. Now here's Farai Mwakutuya with more details in Harare.
While it's still early days yet, the Zimbabwe Stock Exchange seems to be living up to expectations and has picked up from where it left off last year.
I think looking at the performance of the African markets so far, just from the past 2 weeks, we will see that already the Zimbabwe Stock Exchange was, I think, close to about 6% up, and this is in actual real returns. And my anticipation is that we should hold strong in that regard, for the rest of the year.
The dearth of viable investment options will continue to buoy the local bourse.
When you look at the money market, the interest rates that are being paid there, they are negative real interest rates. When you compare them with inflation, where inflation is around 348%, and the interest rates that are being paid are between 30 to 70%. So you can actually see that investors will not recoup much in terms of interest earnings. The real estate sector, you can actually also see that it's very illiquid. People are holding on to sell in US dollars, and the prices in US dollars are not are too high for those who hold US dollars.
Unlike in previous years, local investors are expected to dominate activity. Concerns over the repatriation of dividends, as well as the abrupt closure of the exchange for 5 weeks last year, saw some jittery foreign investors take flight. The ZSE has lowered the minimum amount needed to invest to 500 Zimbabwe dollars, about $6, and set up a trading portal, paving the way for thousands of individuals to buy and sell shares directly.
Really, individual investors make up less than 5% of the participants on the Zimbabwe Stock Exchange currently. So this is a great opportunity. Zimbabweans generally have a high propensity to save. And, once you've saved that money, you want to make sure that you don't just keep it in a place where it loses value because of inflation. You want to make sure that you find a home for it where it can grow. And so the Zimbabwe Stock Exchange does offer that opportunity.
The ZSC says about 20% of trades have come through the direct portal already and plans to make further improvements to see the volumes grow. Farai Mwakutuya, CGTN, Harare, Zimbabwe.
You are watching Global Business Africa. We're going to take a short break now, but still to come. We take a look at the first vending machine that offers COVID-19 home test kits for the general public. And China prepares for its first ever International Consumer Products Expo as the country opens up its economy.
It's just taken me completely out of my depth, but at the same time it's exciting. It's new, it's different, it's a challenge.
It's really exciting.
Let's now take a look at other headlines this hour. The death toll from a traffic accident in Cameroon's western region has risen to 53, with 29 people injured. Now, the tragedy occurred in Sanchu village. The crash happened in the early hours of Wednesday morning. Police report that a 70-seater bus collided with a truck carrying fuel. The ensuing flames partially burnt both vehicles. The regional governor said that many of the bodies could not be identified. Meanwhile, South Africa's Health Products Regulatory Authority has approved the compassionate use of the drug ivermectin for COVID-19 patients, but the protocols around the drug are yet to be decided. There have been growing calls in recent days to be allowed to administer the medication. Health authorities have been reluctant to approve its use in the absence of comprehensive clinical trials. And UK Prime Minister Boris Johnson has announced a new international coalition to tackle the impacts of climate change. In a virtual address to the Climate Adaptation Summit, Johnson said that the UK is partnering with the United Nations and other 5 nations, including Egypt and Malawi. And finally, the Chinese Lunar New Year travel rush will begin on Thursday, and it is expected to last over 40 days. Because of new coronavirus outbreaks in parts of China, authorities are tightening travel restrictions and epidemic control measures. China's transport ministry said around 1.7 billion passenger trips are expected during this period, which is regarded as the world's biggest annual migration. That's a look at other headlines this hour. Let's now get you some international news. Europe has urged pharmaceutical companies to honor their commitments to supply coronavirus vaccines. Delivery cuts and delays have dimmed hopes of a quick fix to COVID-19. After AstraZeneca's change in its vaccine delivery schedule, the European Commission has proposed what it calls a transparency mechanism to keep track of exports. But the Commission also says it's not an export ban. CGTN's Tony Waterman has more from Brussels.
European member states, many of which are still ferociously trying to beat back a seemingly endless wave of new infections, are furious over not just this AstraZeneca delay, but also the Pfizer delay, which was announced last week. In fact, Emir Cook, the head of the European drugs regulator, is speaking in Parliament, giving an update on the AstraZeneca approval process, saying that it's in the final stages and there could be a conclusion at the end of the week. Of course, we're expecting it to be approved by the end of the week, but MEPs are really using this as an opportunity to just vent their frustrations at this delay, many of them feeling that the explanations that have been given are just absolutely inadequate. AstraZeneca, of course, saying that it's a problem with the supply chain in Europe, but there is growing speculation that AstraZeneca has perhaps shipped some of the doses which were manufactured in Belgium to other customers before realizing that production would not be able to keep pace with contractual obligations. And Brussels now wants to know exactly how many of these doses were manufactured in Europe and where those doses have gone. And going forward, it wants to implement an export control mechanism, or an export transparency mechanism, as Brussels likes to call it, which would require companies to give early notification when they are exporting vaccines, COVID vaccines, which are produced in Europe. I did reach out to Moderna, Pfizer, and AstraZeneca today. I only heard back from Pfizer in a statement to CGTN saying that they understand that this proposed control mechanism is not meant to disrupt the supply chain, but saying that it is critical that governments do not impose export restrictions or other trade barriers that risk creating uncertainty and disrupting supply of vaccine to patients around the world. So obviously some concern there that there could be some unintended consequences if this mechanism is put in place. We're expecting more details on that proposal to be released later this week.
And meanwhile, Wellness for Humanity has unveiled the first vending machine that offers COVID-19 home test kits for the general public. The vending machine, situated at its new flagship wellness location in New York City, is contactless and the tests are self-administered. Now, the company says that the RT-PCR saliva tests are 99% accurate and the rapid antigen test is 97.4% accurate. It adds that the tests are priced at $119 and could be covered by insurance. Now, speaking during the media rollout, Wellness for Humanity co-founder Pavel Stuchek said that they are ready to keep the vending machine stocked to offer about 300 to 400 tests per day.
I just purchased my test online. What I did get is this amazing little barcode, which is all I need to be able to simply plug it in. As soon as you get to the machine, it will activate the barcode. With the activation, it's going to take about 15 to 20 seconds to trigger the test. It looks just like this. This is our PCR saliva. And essentially, as soon as you get home, you would open this. Inside there, you just simply need a scoop of saliva to be able to have the results. It comes with a shipping label back, so all you have to do is just drop it off at your local FedEx and you're good to go. Results take anywhere from 24 to 48 hours, and something that we also will have in the future is expedited results, so that way travelers or people in immediate need can benefit from it.
And let's head to India now, where authorities have ramped up security in New Delhi after farmers clashed with police during a massive farmers' tractor rally on Republic Day. Now, thousands of farmers protesting against agricultural reforms stormed into the historic Red Fort complex after tearing down barricades and driving tractors through roadblocks. Reports indicated that one protester was killed and 86 officers were injured across the city. Now, farmers have expressed concerns that the new reforms help large private buyers at the expense of producers. 9 rounds of talks with farmers' unions have failed to end those protests, as farm leaders rejected the government's offer to delay the laws for 18 months. And the first ever China International Consumer Products Expo will be held in May in Henan province. Officials say the event marks a new stage in the country's drive to open up its economy. CGTN's Gao Ang has the details.
Under the theme, An Open China, a Pioneering Hainan, the first China International Consumer Products Expo started its 100-day countdown on Tuesday. Officials say the expo focuses on building Hainan into an international center of tourism and consumption and aims to provide a boost to global consumption growth.
In only 100 days, the first Hainan Expo will open its doors. This will be an important milestone for China, Hainan province, and the international business. Because Hainan Expo marks another great step in the development of Hainan Free Trade Port and a new step of China's integration into the global economic system.
Officials say the exhibition will exceed 70,000 square meters and the area for overseas brands accounts for nearly 80% of the total. Switzerland will serve as the guest of honor, and more than 10 countries and regions, including Japan and Germany, will participate.
We hope these global consumer products can make good use of the Hainan Free Trade Port platform to share in this opportunity. Likewise, we also expect our domestic products to go global via the Consumer Expo platform.
The Chinese government published its plan for the Hainan Free Trade Port in June last year. Its aim is to build the southern island province into a world-class free trade port with real global influence. Officials say the expo marks another step in China's opening up and integration into the global economy. Gang, CGTN.
Well, let's now turn our attention to the logistics industry, where soaring shipping costs due to pandemic disruption have become a big problem for UK retailers who are selling Chinese goods. CGTN's Jemima Walker has more.
Made in China is a commonplace label on goods in Europe. And that means they have to be shipped from China, which with skyrocketing prices is becoming almost impossible for some companies.
About 60 to 70% of all toys are made in China.
The Entertainer is Britain's biggest independent toy retailer. It has 172 shops in the UK and 40 in Spain. Even a company this size simply cannot absorb the higher costs. It means they will inevitably be passed on to the consumer.
One of our very large teddy bears that retails for £40 would probably end up, because of the new freight rate, nearly double. So we're going to have to just discontinue very large items that have a very large cube. So it will have an impact on, one, the range, and it will have an impact on our retail pricing.
Pre-pandemic, it cost around $2,000 to ship a container from China to Europe. Now, European lockdowns are causing congestion at ports, so containers can't be returned quickly enough. Rising demand for Chinese goods means there's now a container shortage, pushing prices up to around $14,000. Edge Worldwide Logistics is a UK freight forwarder.
Ultimately, we've got to a point now where lots of people are stopping shipping products. So now it's completely flipped round and you're seeing a huge backlog of orders building up in Chinese warehouses. It's not just China, it's Southeast Asia as well, but in Chinese warehouse particularly, because people said, well, I can't afford to pay an extra $10,000. It's more than the margin I've got to move these goods.
In the UK, companies are facing added pressures relating to Brexit.
If Brexit works out fine and there are no major congestions in the ports, everything will work as normal. If Brexit turns into causing port congestions in major ports in the UK, as a major container line, the backup plan would be, well, just skip the UK port. It will then create problems for the UK importers and exporters. But from a major container liner perspective, the UK is just one small piece of the larger picture.
While some companies might look to get around the increased shipping costs by sourcing products closer to home, for most that's an unrealistic prospect.
In the end, China is the largest supplier of toys to the world. They're capable of the very high volumes. They're capable of consistently very high quality, which is really important for toy safety standards. It's a country that understands the toy market well.
It's hoped that Chinese New Year in February, when there's a lull in factory production, will see shipping prices fall. But there will still be a long way to go for equilibrium to be restored. Jemima Walker, CGTN, London.
Now, wealthy Gulf states have invested heavily in arts and culture in recent years. But while mega museums have become major tourist attractions, governments are realizing that homegrown cultural industries could also aid ongoing diversification efforts, especially at a time of low oil demand. Here's CGTN's Jim Stanman reporting from Dubai.
A region built on petrol dollars, but now seeking to reinvent itself, charting a path towards a future where the cultural economy could play an increasing role.
A lot of what's going on at the moment is really reflective of the need to grow a culture industry that's really ground up.
Here in the UAE, that's meant going beyond mega museums like the Louvre Abu Dhabi, reportedly worth about $1 billion or the upcoming Guggenheim offshoot, to develop a homegrown cultural economy in a part of the world where full artistic freedom of expression isn't always guaranteed. Founded in 2008, Alserkal Avenue is based at a former industrial site that used to host a marble factory. Today, it hosts over 70 unique concepts across this 500,000 square foot plot of land that is now one of the region's leading arts and cultural districts.
The West did not know what to do with us. We did not fit any of Western cultural institutional molds.
The district attracted a footfall of about 750,000 in 2019. While numbers fell sharply during lockdown, visits have surged recently, with last month's number exceeding the same period before COVID-19.
If we look at our galleries, they were instrumental in shaping and creating not only creative economy, but predominantly the art scene and contemporary art market. Not only for the city of Dubai or the UAE, but for the entire region.
And that's something that also benefits Alserkal Avenue itself, which typically sees a dramatic increase in visitors during Art Dubai, an annual art fair that, according to a study by research firm Nielsen, added $33 million to Dubai's economy in 2019. Neighboring Saudi Arabia is making culture a cornerstone of its ongoing economic transformation. According to local media, the kingdom's new Cultural Development Fund aims to create 70,000 jobs for young Saudis by 2030, contributing to GDP by roughly $1.2 billion annually. It's also preparing to open a brand new 17,000 square meter cultural district in Jeddah.
It's home to the first independent arts cinema in Saudi, the first arts centre, our art studios. We've then gone out and invited the community to join us. So we now have 12 different entities that are coming into Hay and opening with us in November 2021. These include commercial art galleries, architectural practices, a co-working space, a comedy club. We're also kind of encouraging cross-pollination between these different art forms so they start to support each other. Then you have a kind of creative economy that's self-sustaining.
And that's an approach that may lay the groundwork for a thriving industry that could also offer a blueprint for the region's post-oil future. Jim Stenman, CGTN, Dubai.
And on that note, let's take a look at how commodity markets performed today. Oil prices rising above $56 a barrel at some point today. That was after industry data showed U.S. crude inventories fell unexpectedly. Also, there is concern about a resurgence in coronavirus cases in China, which of course is the world's second biggest oil user, and they have slowly begun to ease. Meanwhile, gold prices edging lower today, weighed down by a firmer dollar, and traders say investors are waiting for the U.S. Fed's monetary policy decision and developments around the country's stimulus package. Well, let's take a short break now, still to come on the show. We meet the team behind buses made in Cameroon. Now, Nigeria's hospitality industry is one of the sectors that has been badly hit by the COVID-19 pandemic. Many hoteliers in the West African nation are now reeling from the effects of the crisis, with thousands of job losses already reported. And despite the easing of restrictions, business is yet to pick up for the vital sector. Here's CGTN's Deji Badmus with more on that story.
It's been months now since this hotel in the Nigerian capital Abuja reopened for business after the government relaxed COVID-19 restrictions across the country. But things are yet to pick up. Business is still very slow and far from what it used to be before COVID hit.
The first lockdown, it really affected us. We had to close approximately 3 months. Imagine 3 months closing. You have to pay salaries, You have to pay utilities, water, electricity, and really it's an expensive bill. And you had employees working for you for 10 years. They have their families. So it's not fair to tell them go home, not to pay them.
The first lockdown indeed hit the country the hardest. With flights and interstate travel suspended, guests were simply a no-show at hotels. Nightclubs and relaxation sports were hit as well, as they were all ordered to shut down.
In the last 12 months, if you look at it, our occupancy, especially in the hotel industry, dropped drastically to about 80 to 85, 90% in most cases. And that means that the revenue stream that was coming in into the businesses were no longer coming in. It made many organizations to reduce manpower.
And just as the industry was trying to settle down, the second wave of the pandemic hit. The government was forced to shut down some aspects of the industry like nightclubs and relaxation sports again. This popular nightclub and lounge in Lagos had just reopened when the second wave of the pandemic began, and it had to be shut down again. It's the same story for virtually every nightclub in the country.
It has actually affected those badly, and it's not something to write home about, because normally we know how our business goes, even on to paying salary and the rest. Even till now, I just come here every day to sit down.
For now, hotels are only allowed to operate under very strict COVID-19 protocols. Some, like this one, are even going the extra mile to win the confidence of clients that it is safe to lodge with them.
Even now, if you go to the rooms, some facilities will not be found, like no menus on the room, no telephones, sheet, nothing, just now. And we are disinfecting the rooms before any check-in and after any check-out. We will do the disinfection of COVID-19, the one applied by NCDC.
The industry has received some level of support from the government, but industry players say more still needs to be done.
What we have been able to get so far is salary support, which was given to maximum of 10 staff of organizations and minimum of 3. But I don't think that is good enough, because it's just like a drop of water in an ocean.
The hospitality industry is managing to forge ahead, but recovery is certainly going to be a long and difficult process. Deji Badmos, CGTN, Lagos, Nigeria.
And in Kenya, the Kitui County government has started a project to make footballs. The project hopes to meet increasing local demand for a product that is mainly imported. Here's CGTN's Nick Mudimba with the story.
The project will see the county in Kenya's eastern region take on competitors, including global giants. The county government of Kitui has started a journey that will see many young people from the region benefit by getting expertise in making these soccer balls. The factory will also produce volleyballs and handballs. Geoffrey Kitodia says he used to work at Adidas in the 1980s and is happy to be back home to make a difference.
Nilikutana na governor pale inaitwa Tulia.
I met the governor and told her I can make soccer balls, and because she's into empowering the young people, she told me to come and start this training. Many of them here can now make soccer balls from scratch.
At the ball-making facility, every worker has an assigned role. Every 2 hours, a soccer ball is made. The processes here are manual.
The quality of our soccer balls is similar to that of imported soccer balls. Ours follow strict procedures to give it the required standard weight, the leather is good and is cut well by machines.
Most local clubs, schools, colleges and other entities use imported balls, a gap the county administration wants to plug in order to create more jobs here. Making of these soccer balls is actually very beneficial to this community, the youth in this county, and of course the country. For the first time now, many will be able to actually use soccer balls made in their own home turf rather than importing soccer balls from other countries across the world. This is indeed one step to make sure they depend on themselves. Nick Mudimba, CGTN, Kitui County, Kenya.
And in Cameroon, a local bus manufacturing plant is making a name for itself in the transport sector. Sotra Bus, created to offer homegrown solutions, now supplies buses to 10 public transport companies in the Central Africa region. Here's CGTN's Joy Kiruki Juma with the details.
Sotra Bus is the first vehicle assembly unit in Central Africa. It specializes in the construction of 35 to 70-seater buses. Located in Douala, the economic capital of Cameroon, Sotra Bus manufactures the skeleton and bodywork of buses. Its founder and CEO explains the idea behind the creation of the company.
We
are part of the President of the Republic's emergency plan. We asked ourselves what we could do to put Cameroon on the path of emergency. Thus, we decided to create Strobus because we noticed that many transporters were importing their vehicles. Strobus will thus be able to allow Cameroon to be independent on this issue.
Mbafe says the company is locally financed.
There are no foreign shareholders in Strobus. It is a company under Cameroonian law, and it is 100% financed by the Cameroonians, and I am the boss.
The buses are used by several intercity transport agencies in Cameroon and Central Africa.
I placed the order for a bus and came to see the progress of the work. That's the big advantage with Sotra Bus. With imported vehicles, this is almost impossible. It will certainly be necessary to make round trips by plane, and that is excessively expensive. At Sotra Bus, we can ask the company during the manufacture of the bus to change parts or things we don't like, and they do it without any problem.
We used to buy imported buses, but these buses are already used, and they made us believe that they were brand new ones. This made us lose a lot of our customers. It is fortunate for us that a Cameroonian promoter created a bus assembly back here home. Strabus buses are very good quality. There is also the after-sales service, which is very well provided. When you have a problem with your bus, you can go to Strabus workshops and they will do the necessary work for you.
To date, Sotra Bus has already manufactured and sold nearly 300 buses in Cameroon alone. The company produces 4 to 5 buses per month. It also employs more than 250 people. But despite the encouraging results, Sotra Bus is facing challenges.
We have foreign customers who want to buy our buses, but we have difficulty related to taxes. The materials we import are taxed at the port of Douala. When we manufacture the buses and we have to export them to our foreign customers, they still have to pay taxes in their country. So we asked the government for a favor which will allow us to manufacture and export our buses more easily.
The African market is dominated by imported second-hand vehicles. But that's a trend that companies like Sotra Bus are trying to reverse. Joy Kiruki Juma, CGTN.
And before we leave you today, a quick look at Africa's currencies. South Africa's rand dropping about 0.2% to the dollar, with investors expecting the U.S. Central Bank to hold interest rates and reaffirm its dovish outlook. Meanwhile, Nigeria's naira falling to 480 naira per dollar on the black market. Traders say that was spurred by demand pressure in the foreign exchange market, increasing as economic activities resume following the end of the Christmas and New Year holidays in the country. Well, that's it for this edition of Global Business Africa. Remember, you can send your feedback to the contacts on your screen. You can also follow us on our various digital media platforms. From me, Uche Okoronkwo, and the rest of the team, thanks for watching.